Morning everybody, Mike Niemiec here with some early morning grain and oilseed news and comments for Wednesday, November 5th. Well, unlike the month of October, the month of November has started out on the defensive, and that continued in the overnight session. We have wheat prices down around 6 cents, the corn market down 4, the bean market down 12, meal down 3.5, and the soybean oil market down around 50 points. During the month of October, we saw a few things develop that gave us a decent rally from our contract lows and or lows for the move. Pretty much saw the trade that was net short the beans and the soybean oil get long. They added to their long positions in the corn and meal, and they lighten up on their short positions in the wheat. A lot of the buying in that during the month of October was predicated off of the soy meal market, that coming on the heels of a 92 million bushel bean carry-in number. Lack of supplies, slow harvesting, lack of farmer sell movement, rail logistics, business on the books, all attributing to cash market strength in the meal, running shorts into the meal market and in the beans, giving us the rally during the month of October. And once again, we had a very healthy month of October, but we've started out on the defensive for the month of November, and not to say that those meal factors have changed in any great shakes. We kind of cleaned up some chart gaps in the beans and meal above the marketplace, but since then have been on the defensive. Can't really say we've seen meal basis levels go defensive. Can't really say the rail logistics have cleaned themselves on up. But we're also going to part 2 in here, and it's on Monday. We'll have a USDA supply and demand report. The average trade guesses are out. The average trade guess for yield for corn and beans is maybe slightly higher than where the USDA is currently at. Production going on up. But the carryout numbers continue at or maybe a little bit mixed from where we're currently at. And those type of carryout levels versus the futures prices that we got as far as the rally goes during the month of October, seemingly in our mind, or my mind, doesn't really seem like we should continue to advance the prices when you go and look at the type of carryouts, stocks to usage ratios that we have and or what have you going forward in here, that the prices futures wise should continue with the rally. That in conjunction, we continue to outpace ourselves versus world competition, so will our exports stay strong? And then the other factor going forward also is if South America has no weather problems, crop problems, they will be adding to an already abundant supply of world supplies out there for corn, beans, and wheat, once again also inhibiting any type of further advances in our prices, at least as far as the trend goes. So we've got somewhat of a range established, the highs and lows during the month of October, backing the prices off here as we start the month of November. All said and done, if we have non-bullish USDA reports, continue to see that we're losing business because of our rally, and South America is okay. I guess the trend of least resistance will be back towards our lows for October. Conversely, we have some foolish supply and demand tables and or in particular problems in South America. The highs of October should be taken on out and exceeded to the upside until we more or less have better clarification of their crop. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.